Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our nightly update for May 29th, 2024. Let's take a quick look at how the market did today. Well, as you can see on the far right here, a sea of red across the board. The Dow down 420 points. Now, as we mentioned in our chat today, we do have a channel happening here. We've got 2 points, or actually three, up here along the 40,300 level, and we've got one down here at 37.4. So we are making our way back towards 37.4. We could bounce off it and start making our way back up to this level, or if it breaks, then we have something much different. Lack of support here, and likely a much stronger move lower. The S&P down about 41 points, is sitting right at that 20. So this will get interesting here. The next couple of days, we do have a couple of announcements. Before I move on with the charts, we do, just a reminder, we have GDP growth out tomorrow morning, 8:30 a.m. That's an hour before the market opens. That could affect the futures. And then core PCE number, this is a big one that the Fed looks at for their decision on interest rates. So Thursday and Friday, GDP growth and core PCE coming up. The NASDAQ was down 137. Now that's despite NVIDIA continuing its climb here. Not a huge move, but the point is that obviously there are a lot of other issues in that index moving lower here. And the Russell down 31 points, now below, back again here. It looks like a nice rejection at that 20. Where do we go next? Always look for prior lows or prior highs. And here's a prior low right here, 1975. That's where we should be headed next. Now, let's look at crude oil, down 60 cents today. This is about to retest that 20. If it holds and bounces and clears today's high at 80, what was it, 80.62, that'll look pretty good. If it breaks below the 20, then likely to retest the 76 level here. Gold off 15 points here also. Looking like it's going to reject it at the 20. So we'll have to see if it clears this low. We should be looking for a move to 22.80. Near term, that is. And silver up 23 cents, still looks good. This one looks very good, actually, especially on the higher time frames. The dollar also showing some strength today, up about half a point. More importantly, closing back above the 20 for the first time in a long time here. Let's see if it can follow through tomorrow. Now, WGS, I want to just start talking about some trade ideas here. And WGS, that's GenDX or GeneDX Holdings, not looking bad here. We have got a nice slope on the 20. We were kind of consolidating, broke out a little, came back, holding support here. Today we get the buy signal right near that upsloping 20 in the top portion of the bar. The higher time frames are aligned. 75 days to the next earnings announcement. Now, this one is not anywhere near all-time highs, but you can see how ever since it went public back here in 2020, 2021, it took off early, and then like most new issues, collapsed. The problem is it did not hold the lows here and just broke down and just completely started whittling away. Now it's been consolidating for quite some time. If we zoom in though, look at where we are. We're just above the highs of those consolidation levels. So looking pretty good here. And if you look at the monthly time frame, not only are we back above the 20, but we did so on much heavier volume here coming in. So this one looks pretty good. Now the options aren't great, but the stock itself is inexpensive. It's just a $22 stock, so it is playable. So that is one that we'll watch. Recapping some of the ideas from yesterday, GME did not follow through here at all. Did not clear that high, actually dropped today. So this will be interesting to see if it can come back and take out that high. Of course, if it comes back and takes out this low, see you later. It should go much lower. And the other one was DJT from yesterday, which did follow through, although not a big move just yet, but um, did clear that high. So something to look at. So again, we'll keep an eye out for a GDP number tomorrow at 8:30 a.m. and go from there.